Give us a sense, Mike, basically, how badly could China hurt our soybean farmers?
It's much easier to say and harder to do because they import 100 million metric tons of soybeans a year, and the total amount of soybeans in the market, 150 million. The U.S. is a big part of that in South America. Where are they going to get their beans? They're just not available. So they have to import soybeans, and if they try to import from any place else, they're going to pay a higher price, and they might not get better beans. So it's easy to say, yet the market's been expecting this for a year. And it was expecting when soybeans were below 10. Now we've had the first move in the last few months back below, from above 10 back below 10. So it's the first good test of support. And I think the market's going to get through this and probably go beyond it. It's typically a good time of year for soybeans. The market's really starting to improve.
Okay, we just want to mention that the president is tweeting again about this. And
I was waiting for it.
He's told us we're not in a trade war with China, which sounds like good news. But then he goes that the war was lost many years ago by the foolish, incompetent people representing the United States. Now we have a trade deficit of $500 billion. That's not quite right on goods. Maybe he's got services in there. With intellectual property theft of another $300 billion. We cannot let this continue.
Which you think would mean that they should actually buy more soybeans, and that would actually help the trade deficit. So just, Mike, to what you're talking about, come inside the Bloomberg here, and you can see where we are in support. So the white line are soybean futures, and then you have the 200-day moving average, and then the blue line is the trade-weighted broad dollar index. What's the potential downside for soybeans and also its compatriots like wheat, corn, all of that is mixed into this trade battle?
I think the downside is they get back to break even on the year. They're the best performing commodities this year. Grains are up 9% or so on average, the best performing sector. And we've needed a reason to kind of pull them back a little bit to kind of test the market. So this is the first good test. It's a good reason. But you can see one of the key things from that chart. The dollar's reversing. That's a good sign for soybeans. So what is China going to do? They're going to buy more expensive soybeans from Brazil and Argentina?
How are they going to feed their pigs?
Exactly.
Because the majority of the soybeans is used to feed their pigs, and they eat a lot of pigs.